Hey guys, what's going on? This is Alex with the Stock Operator channel, and welcome back to another portfolio update. And as you guys saw in the title, we're buying some stuff back. The market cycle is red. We're getting our dip that we're hoping for. And yeah, so currently the account sits at 123,592, slightly up on the week, but still down on the month. We're starting to see that drawdown on the 1 month chart here, down 2,286. But what I'll show you guys in this video is basically my drawdown, my equity curve, what stocks I'm buying, what I'm looking at buying in the future, and when I'm going to get back, fully into this market with a brand new portfolio. So with that, if you guys are into that, stick around. All right, so currently we are up about 25% on the year. This is the equity curve year to date versus the market indexes. And now we're finally, back outperforming. We lost a little bit of that outperformance in the last like 3 weeks, month or so. But, because we got out of the market, we're kind of missing out on this dip that's happening. And we like that. So, doing okay this year. We're proud of the performance, and we're just trying to keep it under control here and not lose into the end of the year. So for those of you guys who are new to the channel, this is what the account looks like now. Basically, we liquidated everything and we went into SGov, which is just a treasury ETF that pays 4%. And then we have a small amount of options, about $8,000. And we've been kind of adding to some things here as the market dips, but we're just kind of adding short to medium term options contracts and keeping this large position in the short-term treasuries because we think the market could, draw down a little bit more. We're at a slight drawdown, about 3 to 5% on the IWV, and I'm thinking that we could hit 5 to 7%. So we're going to slowly add into this dip here, but this is what the account looks like right now. These are the options contracts that we are currently long. It's a mix of natural gas, oil stocks, aluminum stocks, and then we started to buy some tech stocks. So we got Circle, which is a stablecoin company. We got STNE, which is a Brazilian fintech company. What else did we buy? We bought Qualcomm, which is a semiconductor, CG. And then also today we made some new buys in CRWV, and we made some new buys in another oil stock. So this is the equity curve currently for the account, and I could just make it a little bit bigger here for you guys. Yeah, so what I was saying, 2-3 weeks ago was, once that equity curve gets below that 16-period moving average, we want to be very cautious. And now, thankfully, we got above that 16-period moving average. So we're back above it. We don't want to dip below it. And we have our drawdown under control here as long as we are above that 16-period moving average on the equity curve. And this is our drawdown. So when we made the decision to liquidate the account, we were at like a 3 to 4% drawdown, and it looked to be getting worse. And we're glad we did because there's a lot of stocks that were in the portfolio that just got annihilated. Literally, some of the stocks like lost all the gains for the entire year, and I had been holding those things for like 9 months, and it lost all the gains in like 6 days. It was crazy what has happened under the surface here. But this is the drawdown, and we are now back above our 16-period moving average and moving in the right direction. So what I want to do for the rest of the video is go over the stocks in the account, look at the TA, look at the storyline, and then also give my thoughts on where I think the market's going and what we're looking at going into the future and what positions we might be wanting to add. Okay, so I'm just going to go over the stocks that we've started buying in the portfolio one by one, starting with this one. This is EXE. This is a natural gas producer, and yeah, it's kind of been bucking the trend here of the general market. Today, it's having a tough day, but they bought the dip. So we like that. This is a green or blue sky breakout kind of a play. It's above all the moving averages. It is a little choppy in here and getting towards highs. So, it's natural for this thing to kind of want to pull back here at this area, that we outlined right here. So I'm glad that this thing is actually showing this giant demand wick like that. Okay. Here's another stock that we're also long in the natural gas space. It's a similar stock, pretty much the same thing as EXE. This is EQT, same spot, virtually identical. We just wanted to buy both. And same thing, a gap down today, but it's also rallied. It's at the high end of the range today. We like that. It's kind of showing some pause here at the same spot, but nothing wrong with this stock. We think natural gas will do pretty well because I think inflation is going to pick up here. We're seeing it, in the bonds. The bonds are getting crushed. That means inflation's coming back, and also we're seeing the dollar kind of go up higher. So it's looking like a similar kind of thing to 2022. So you want to be long oil and gas. All right, so keeping with that oil and gas theme, this is another stock that we got long. It's in the same sector. This is just a little bit more higher beta. This is AR and Taro, and basically does the same thing. It's just a natural gas producer. Higher natural gas prices go, the more this thing will go, but it's a little bit more volatile, a little bit weaker because it's not growing as much, and I guess the earnings are a little bit more volatile than those bigger partners. But we want to be, in this sector because this sector obviously in 2022 and 2021 does very, very well in an inflationary environment. So we think that's going to continue. Keeping with the oil and gas theme, this is a oil driller. This is Noble Corp. This is offshore drilling. And basically, with this stock, we think that the growth in the Permian Basin is slowing, so people are going to have to go offshore to keep the oil price down, and so these guys will benefit from that. More drilling activity offshore. So this thing looks pretty decent. It's above all the moving averages and making a nice little move today because the oil price is finally starting to go higher. Now moving on to some material stocks, because material stocks also do well in inflationary environments. As you can see, 2022 and 2021, they did very, very well, and we think that cycle is going to continue. So this is Alcoa. This is an aluminum producer, and it's just starting a brand new uptrend here. So it's going to be volatile here because a lot of people like to fade brand new uptrends. But if this thing gets going, you're in early, basically. So we like that one. We also like Century Aluminum. I guess the biggest shareholder sold it down here, and so we picked it up. Some options contracts on this thing, and this thing has been in an uptrend. This is the strongest aluminum name, so we just wanted to be involved here. And now, yeah, it's not the ideal for giant volume to come in here, but given that we had that volume and it didn't continue, it means that people want to buy into that sort of volume. So we are bullish on this stock. We're bullish on aluminum going forward. So now what I want to do is I want to go over some of the stocks that we actually just recently bought. So we recently bought CoreWeave. This is everybody knows this one. This is an AI data center stock. And basically we outlined this on our weekly watch list video. And we actually pulled the trigger on this thing today because, we got this volume coming in and had a kind of upside reversal where it gapped down and now it's below that candle. I think it could go sideways and go down even more, and hit this level right here. But, we just want to kind of average in just in case the market V's again. And we just want to start averaging into this one. I mean, it's a very strong stock in the right industry group. And it's not like a IREN, that's really extended, or APLD that's pretty extended. It's the largest one and seems to be holding up well versus NBIS, which is another competitor in the same space. So we got into CoreWeave. We're happy with that purchase. Another stock that we got into is Circle. This is a stable coin play. And we've been wanting to get into this one, but we wanted the 6-month window for the IPO to kind of come up. And as you're seeing here, this 6-month window is here, this earnings, and we kind of see a lot of the insiders selling. But because it's kind of getting stuck here, I think there's a lot of people who are buying that supply off of the insiders who have their first chance to sell here after their 6-month window is opened up. So we got long this stablecoin play. Even though we think like crypto is not looking too hot here, actually Ethereum is looking better than, let's say, Bitcoin, which is actually good, because that was our bet, is that, Bitcoin is a little bit sketchy here because of Michael Saylor. What's going on over there, has his stock is dipping below NAV, and he's going to be a forced seller of Bitcoin. But there's a big theme here with crypto stable coins and that sort of thing. So this is the guy. So this is the stock you want to own. So finally getting some volume in here into a decline, and that's demand showing up initially. So we like that one. Another stock we got was Qualcomm. Now this is a semiconductor that didn't really move a lot with the majority of the semiconductors. A lot of them are moving really aggressively. This one has not. It had an announcement that it's going to be competing with Nvidia here, and then it pulled back to the bottom of that candle. We kind of like to buy those. News comes in, people sell the news, and then it kind of drifts, and people see what's going on. And during this QQQ dip, I mean, this stock has kind of been holding up decently well here. So we're looking forward to this thing. It's starting a new uptrend, as you can see from these two moving averages, just to get some semi exposure in Qualcomm. And lastly, we bought back in. We had this one and we missed it. Okay, so this is the Brazilian fintech company StoneCo, and it's just at this area that I believe could be the last point of support here, the backup action in Wyckoff terms, before it breaks out and makes a giant move to the upside back to $100. So we didn't want to miss out on that. It had this earnings where it gapped down with big volume, and these guys bought the dip, obviously. It did test the quarterly moving average, and it's coming back down. So we'll have to see. We'll have to watch this one. I wouldn't be surprised if this thing back tests this kind of support here, provides a range underneath this quarterly moving average, similar to what it did here. It's actually very similar to what happened right here at this juncture right here. So boom, undercuts the quarterly moving average, back test, does one of these kind of down waves. So same thing is happening here. But it's a little bit stronger, right? Because more demand showed up as it broke through this quarterly moving average over here. It actually had a bigger rally than it did here. And more demand is showing up into this candle. So there's a lot of demand versus, this thing over here. And this thing kind of declined on no demand and then proceeded to rally. So if this thing could kind of stay here, I think there's sufficient demand here to push this thing back up to around $21. And yeah, that's basically everything we did, and that's what the account looks like. I mean, we do have a brand new account ready, locked and loaded if the IWV can get around here. So basically what I'm thinking could happen. This is my cycle forecast, as you guys seen in my other videos. This thing was a very nice yellow cycle. It pretty much nailed it. It was a little bit weak, and that weakness kind of cued us to this aggressive red downtrend. So we're gonna have to see on Monday what happens, because in red cycles, these rallies can happen, but then they just instantly get negated. So we could be right back down here. I would not be surprised at all if we can get back down to here, because if you look back in history, on every time you have a brand new green kind of bull market start, the first initial big drawdown is around 5 to 7 to 10%. So 5 to 7 to 10%, that's like right around here. This is about 6.5, 7% right here. If it were to be a 10% drawdown, it would go back down to here. And that's normal. That's every time we have a new bull market, you have that sort of a drawdown. So yeah, guys, that's it. That's the account. That's where the portfolio is at. If you like the video, hey, feel free to hit that like button. It really, really helps out the channel, and it shows me some support and makes me really happy and keep doing these videos for you guys. Yeah, and if you guys have any comments, like if you guys totally disagree with what I'm doing, or if you guys agree with what I'm doing, or you just want to say something, yeah, really appreciate that, and feel free to write a comment down below. And as always, I hope you guys have a great weekend, and hey, enjoy. Take care.